Good afternoon. I know post-lunch is the most difficult job, and that's what I have been assigned with. And I can pretty much make out with the attendance in this room that I think there are a lot of people are probably missing after lunch. Nevertheless, just to shake up a bit, had this session been discussed in China, let me tell you, there would be queue outside. And unfortunately, in India, we still haven't yet seen the full impact of how some of these things are changing. Because what prompted me with the statement at the beginning is that globally, if you look at the space of AI, close to 9% of all the deals, the share of the deal is going to AI. So AI relatively as a part of share of deal yet is small. However, if you look at the total global deals, 50% of those deals are going to China. So China is, as we speak, undoubtedly the world leader in AI. 38% of that is going to US. So now you can well imagine why this room is half empty, right? Because if between China and US, 87% of the global deals are happening, what's left for the rest of the world minus these two countries, 13%? And probably out here in India, we still do not see really the true impact of this or what this can create. Because be it the share of deal, be it in terms of the scale, or be it in terms of patents that have been taken, that market that has already been captured right at a very nascent stage. This seems to be another battle which we as a country seem to be losing. On this note, since the topic today was more related to payments and fintech, I will just bring in one more data point, and I think that's again of interest to those who are looking at this space seriously. There is a startup in China called Megville. How many of you have heard of Megville in this room? Good. So we have one gentleman who has heard of Megville. Now, Megville already has access to 1.3 billion face data records of Chinese citizens. It's backed by Chinese insurance companies, government entities, and corporate giants like Foxconn and Ant Financial. Now think of a scale that we are here talking about. So when you have a company, a startup, building something of that massive scale with the backing of government, insurance companies who are going to use this data, and obviously on top of it, when you have large e-commerce and financial giants like Foxconn, which all of you know manufactures iPhones to a lot of hardware, that means you today have an AI embedded device, you have products or financial service that rides on AI, you have the entire transaction ecosystem, which is Ant Financial, all of you would know, is Alibaba's company. So pretty much AI has deeply now got embedded into anything and everything that gets done in China. And I'm sure all of you would have read about how loans to defaulters, to how you can stop access to using flights, to public services, just bases this data and the facial recognition or identity that AI provides. How you can be blocked on social media too. So I think the power, both good side and bad side of this is humongous. So as we look at this entire space, broadly as to AI, blockchain, and VR, because these are the three topics that I was asked to speak on this afternoon, what I would say is AI is right here. I think we are already late in terms of where each of the three technologies stands in the time horizon. Blockchain is something where we still have to see the large-scale impact or what it may change. VR, AR, I think right now still you can safely call it as emerging tech, but definitely AI is something which, as I told you about some data points, we are already late. As we look at some of these things and why I say AI is already here, because of 4 or 5 clear data points that depending on which are you part of industry or fintechs or what do you run, I think all of us know 3 or 4 things that has fundamentally changed in last 3 years. One is there's a richness of data now. 90% of data that we talk of today, or relevant data, got generated in last 2 years. So I think today the kind of data that we have, or the richness of data. Second is the cost of storage of data. That has come down tremendously. So while there is a data generation, there is also the cost of storage has come down. Third is the awareness of the value of data itself. So organizations, enterprises, they've all started to realize and invest in stuff like data warehouse or Hadoop or probably Kafka's, or looking at clickstream analytics or what we call fast data. Because at the end of it, it's not about just data or abundance of data, but what do you make with data? And I think with all of this happening, it was bound that when it needs huge computing power, which the computers of today are just not designed to handle. So it was but natural that when you have structured and unstructured data all coming in, how do you make sense of data? And I think that's where AI becomes extremely relevant, because your ability to recognize patterns, your ability to make sense of a large unstructured data, which is not sitting in rows and columns, and thereby find still a meaningful. For example, what do you do with the faces? What do you do with biometric? What do you do with voice? Now, these are not some financial transaction data that you can look at and make sense of. And of course, with the government itself now becoming extremely active and looking at what's happening around, I think a lot's happening as we look at this space. I think looking at where we are in the journey, a lot of areas that today we focus on are pretty much what we call artificial narrow intelligence. Because when we look at AI, we are talking of what is a human intelligence and how do you replicate a human intelligence through an artificial intelligence. Today, AI is more like a kid who's in a kindergarten, who's learning that this is aeroplane and this is bat and this is the face and this is how somebody talks. But gradually, as more and more of this data gets added on, just like as kids, first we learn words and then sentences and then paragraphs and then we can read a full book or we can recognize patterns. I think this is a journey, and that's why it's even more important for organizations to embark, and for fintechs who are looking at AI as an opportunity to really give it a serious thought, because this is a huge, huge opportunity. And companies who can move from narrow intelligence onto a more broader part, which is what we call artificial general intelligence. That means your ability to ingest more complex data, more different data points, and still make a sense of it. And this is a journey, because unless you start early, you won't be able to catch up, unlike in a lot of other areas. Specific to payments, when we look at what are the areas that I see opportunity in payments an organization should look at, one of the first that comes is AI itself is becoming a channel. Like you had website or online banking or mobile apps, going forward, you may not have any one of those. And AI itself will be a channel on itself. For example, when you talk to Amazon Alexa, or you talk to Google Assistant, whom are you talking to? You're not talking to an app. So AI becomes an interface. It can be rendered in different form factors, but you may not require an app in few years from now. We all love to talk, and if you can interact with someone rather than going and doing those things yourself, why wouldn't one do that? And that's precisely what I call, you ask and it's done. I think some of you would have seen Google Sundar Pichai's last week video. you have to do nothing. You have to just say something needs to be done and it gets done. And I think that's eventually where payments will move. I want to pay someone, if I just say pay such and such person so much amount, and payment gets done. I want to pay a utility bill or I want to book a flight ticket and I just ask and it gets done. So I think the way this entire journey is moving is about moving away from the traditional channels, moving to where the customers are. It can be a speaker, it can be a phone, it can be a browser, it can be any form factor. At the end of it, there'll be APIs that will talk and finally bring those, and every other service provider at the back end will end up becoming a commodity. Because the experience, data, and transaction layer will all change as this entire interface changes. I think the second impact for a consumer is what I call smart devices. For example, all of you would have seen in US, Dash. You just stick it on the refrigerator. Devices will start, they'll have their own identity. They know what they need to buy. They know how they can make a payment. They can store the records of consumption. What is the consumption level? What is the reorder level? What is the pattern of your consumption? And they will run pretty much things just like what you are seeing smart cars or self-driving cars. Pretty much every device can be automated device and they can control what they need, including payments. Also, the entire payment using AI will get embedded in the journey itself. So for example, if you are buying a stock, you don't have to complete the payment. Because if it knows what you buy, a frequency, your risk, you ask and the stock gets completed, the transaction gets done. Or you are on a remittance or an e-com site, the transaction gets embedded there. So rather than people going somewhere else and making a payment, the payment itself will get embedded in the journey where you are. So it's like when you walk into a Starbucks and you say, I want a coffee. You don't need to recognize yourself because now it knows who you are, either using your facial or your voice or one of your identity. It knows your proximity, it knows what you drink, and it also knows the account that it needs to debit. So all of a sudden you imagine a scenario, you walk into a Starbucks and say, okay, and they say, here's your coffee, and you know it's already been charged, you have to do nothing. So gradually these are the journeys where AI will start impacting if you're thinking of a business which is consumer facing or customer centric. The second use case of AI is around security, and I think this is where a lot of work has already started to happen in banks. I'm sure a lot of other industries are also leveraging AI. For example, when you have so much of data on transaction, how do you build an anti-money laundering system? Because finally, someone has to manage tons of data of inward transaction, outward payments, receipts, credential of people. Your ability to manage complex data sets is something which is the easy to solve use cases, and that's where organizations will see initial ROI. Similarly, the entire adaptive authentication and multi-factor authentication. So I was sometime back in Ireland and I was talking to a company which helped even initial setup of Aadhaar in India on authentication. And I think they've all saying moving away to multi-factor, which is how do you use combination of your voice, your iris, your face and fingerprint, and depending on and the location, and depending on that, either you will authenticate, you will let somebody go through, or you probably will have more than one factor, and most of the factors are present on a smartphone that you carry. So it doesn't even prompt you, because as long as your cameras are on and it can sense who you are or your fingerprint, you get authenticated. So I think that's again where on the security and authentication. And the last which I see on security is on the whole issue of fraud risk management and transaction monitoring. Because when you look at any kind of a fraud today, and I've seen some companies in India doing very smart work, where they can figure out if you have changed the name of your company, directors, promoters, at any given point in time you have ever defaulted, or if you have had a pattern or a linkage which establishes you with your intent of committing fraud, you can detect it almost near real time. So I think the ability for banks, NBFCs, fintechs, when they are especially looking at lending, low-cost payment, collections, because you cannot go back through the traditional way of collecting EMIs when your installments or the loan that you are giving are very small amount. And I think in each of these areas now you can build in the interface which can identify. Similarly, on the enterprise side, there are solutions which are getting worked on. One is on the intelligent receivables. Because sometime back, Bank of America, Merrill Lynch, along with a partner called High Radius, they created an intelligent receivable system. Now, the biggest issue is always the matching of the incoming payment along with invoices for any organization. And you find this is a big hassle. And how do you ensure that the payments and invoice match? And because you're all taking digital payments, no more checks, you do not have identifier, how do you manage these huge volume of reconciliation? Similarly, there are solutions on AI which is helping on automated signature verification of checks, because there is a cost of processing of checks, or customer due diligence. Similarly, the reg tech is becoming extremely large because the cost of regulatory risk and compliance for any business, especially if you are in a financial service, is huge. And I think this is again an area where AI has substantial opportunity. The fourth, which is on the periphery, what I call, is around what you can do value add around AI. So for example, there are companies who are building certain solutions around the personal financial manager, PFMs. So looking at all your transaction data and using that data along with analytics to say what kind of products can be recommended at point of consumption. So looking at locational data, transaction data, some of your other social data, and continuously working on a model to define and say that how do you use or offer a certain solution. Or also there are solutions around enhanced cash flow forecasting, that how do you optimize cash, how do you manage your cash better for SMEs, for people who are into the working capital or on a bill discounting customers. So how do you start creating value, be it for large corporates, enterprise, small businesses, or for retail or individual customers. So I think in each of these areas as a fintech, if you're looking at it, I think there are enough and more opportunities available as long as you go narrow down, but go deep inside. I think you will see definitely a sizable opportunity as you look at this. The second, as I spoke about, blockchain. Blockchain, obviously, where we stand, I think there are activities happening. There are bank-led consortiums and startup-led consortiums, which are primarily focusing on payments and lending, more around the invoicing and supply chain financing. But I think what's interesting, and that's happening now, is the government-led consortium of Indian Chain, which is expected to be the world's largest blockchain network, where all government records of individuals will be saved, obviously with a consent-based architecture. And the same data can be used for banks and startups to facilitate new set of use cases. For example, if you have land records, if you have property and transaction records, some states have already started putting that. It's much easier if you have to lend against those collaterals, because then you know the titles are clear, whether the property is mortgaged, not mortgaged, first owner, second owner, what was the transaction pattern, etc. And I think the third part, which is again where we are seeing on the smart contracts to automate payments, I think that's where a large part of area. But I think each of these fintechs can look at either being a technology service provider, because a lot of partners who are eventually going to come onto this blockchain network, they really do not know how to come in and engage there. So I think one role is either you look at it as a technology service provider. Second, there are players that I've been talking to, and I think they are building a very, very narrow but very highly impactful use case. For example, if there is an insurance on a flight, travel insurance, you have the data which is all sitting there between the airlines or the travel portal who has or an insurance company who has issued the policy, and the consumer who has a valid contract in form of a flight ticket. Now, in case if a flight gets delayed or if something gets stolen, one does not have to go and claim that amount, because the cost of processing that claim is much higher than at times the claim amount itself. And thereby building a kind of a solution like this helps probably all the providers to offer a service at a fraction of a cost of what otherwise it will. So again, looking at blockchain, if you are defining a very narrow problem, I think it's a great idea to start. Otherwise, opportunity to work with one of the ecosystems of or consortium and see how you can create value. As we look at VR, and as I said, VR is something which, in my view, is emerging, especially when we are looking at in financial service space. But I think what we are seeing is some of the mobile operating systems have started with AR support. And over a course of time, I believe that the VR kits will be made available as a part of mobile handsets. And thereby, I think once that starts to happen, there'll always be people who will be creating solutions around it. For example, we see in some of the solutions around your stock, your trades, and how you look at some of those experiences. But as I said, I think that's something which we can discuss maybe next year at a similar forum. So thank you very much for the 20 minutes. I hope I could deliver what I was asked to.